You're tuned into The Air We Breathe, a conversation on how we can fight climate change and sustain a cleaner environment with Bennie Lee Williams and Lori Collins right here on Watch Lotus X. But this one, I wanted to break down into sections like I was telling you because it was so much when I was going through your website and I found that referring to the global climate change analyst, and that was in of 2018. I was like, this is some very detailed information, talking about from governance, strategy, risk management, metrics, and targets. I was like, yeah, we have to cover this.
Okay, well, I kind of picked up on the part that I think you're referring to that I'll go into some detail on. I kind of referred to it in one of the previous podcasts,
right?
But I'll a little bit more detail. So what we're going to talk about today is governance.
Yes.
And so, you know, what does governance mean? You know, not everybody may be familiar with that term, but you think about, you know, if you have a nonprofit, you always have to have a board. And the board isn't running the nonprofit. They're there for governance, you know, just to make sure that there's like some guide rails and some feedback. And, you know, most public companies or even a private company usually has a board of directors that helps guide. And so that's, you know, that's sort of a, you know, bring it down to something more day to day. What does governance mean? So the thing we wanted to kind of dig into a little bit more today is this idea of governance around climate change risk, mostly risk. I mean, there's also a lot of opportunity, but usually the governance side is more, you know, the risk. So, you know, if you're running a business, you're, you know, running a mutual fund or you're managing a lot of assets, you know, at some point you want to start thinking about the risk because and I've talked to some of these investors at, you know, State Street Bank or Vanguard, and they're like, look, this is not ideological for us. We don't know within our companies we're invested in, you know, if they're Republican or Democrat. This has nothing to do with politics. We're managing trillions of dollars, and we're sitting here looking at what's happening with businesses and how they could be impacted. And we feel like as investors, doing our due diligence, we can't just ignore that. So that's where it's coming from. I mean, you think about Pacific Gas and Electric, you know, it's the 10th largest utility in the nation, just went bankrupt, you know, essentially over a climate change issue. So they had all these wildfires in California, and they had, you know, electrical wires that, you know, kind of fritzed, and, you know, all these fires in California, you know, were caused by climate change, and then also by the power line shorting. And so Pacific Gas and Electric was held accountable, and they filed for bankruptcy.
Oh wow.
Yeah, that's just a very stark example of how climate change poses a risk. I mean, that's like, you know, a big, acute, visible impact. But I think the investors are seeing, you know, there's a lot of impacts that may be slower to show up, but they've decided they want to start looking at it. So I'm going to give a little history of this whole idea around governance. So the first,
I have my notes ready.
Me too, right? I took some crib notes. So one of the first big movements around this idea of governance happened in France. So in 2015, France passed a law making it mandatory for publicly traded companies to disclose their climate risk. So it's called Article 173, and the name of the law was the Energy Transition Law. And they were the first nation to take this kind of action, because a lot of this stuff is more voluntary. You know, investors will sort of encourage companies, but this is a law in France. And it had a very catalytic impact, because any company based in France or operating in France had to comply with this.
Wow.
So it gave life to a lot of the analytics around climate change disclosure, because most companies were like, what?
Wow.
What is this? What is a climate risk? what even is that? And how do I begin to identify it? And how do I identify it in a way that doesn't make me a sitting duck? These companies, they're publicly traded. They can't like lay out all these horrific risks that, everybody will sell the stock. But one nice thing about making it a law was that every company was on a level playing field. So you don't have to worry that at least within France, that you're going to show all these risks and your competitors don't, and then who's going to want to invest in your company?
Right.
But it doesn't make them a level playing field with other similar companies. Say you're in like the food business or pharmaceuticals or fashion, and now if you're based in France, you have to disclose all this,
Right.
and all your competitors based in other countries don't. But I actually haven't heard a lot of complaints about that particular issue. But so that got the ball rolling, and that kind of gave life to some other companies, some analytic companies that could make a business around saying, well, we're here, we'll come in and help you figure this out. So that was a big first step that galvanized a lot of companies to start figuring out how to pay attention to this in a very formal way that had to be legally disclosed. So it was very formal. So at the same time, in 2015, Mark Carney, who is head of the Bank of England, or he was head at that time, he runs something called the Financial Stability Board. That is a global organization that doesn't have specific authority, but it provides guidelines to the financial industry and recommendations, best practices. So he, in the same year, established a task force, the Task Force for Climate-Related Financial Disclosure.
Wow.
It's a mouthful. It's referred to as TCFD. So,
can you give that name one more time?
Okay. Task Force for Climate-Related Financial Disclosure.
Wow. Okay. That is a mouthful.
Yeah. Affectionately known as TCFD.
Okay.
So, when I get into a room of people that are talking about TCFD, I'm like, I'm with my people, so, you're into it if you talk about TCFD.
Okay.
So, okay. And actually, when this all started in 2015, I was just starting to write, so I got my master's degree in carbon management at the University of Edinburgh.
Right.
And I was reading about this and I was like, wow, that's like pretty interesting. And so it was started by someone in England, but he asked Mayor Bloomberg, Michael Bloomberg, was tapped to head this up. And I was doing my dissertation on business leadership on climate change. So, this was like really interesting, and I really wanted to write about it, but nothing was really happening yet. So they kind of announced it in 2015, and then in 2016, Bloomberg was tapped to run it. He put a committee together. So I kept following it all year to talk about it in my dissertation, and not too much happened. But then in 2017, so they were kind of under the radar, like trying to figure this out. In 2017, they came out with their guidelines. And these guidelines have been referred to and adopted all over the world. And it's, the TCFD guidelines, because it's too much to say Task Force for Climate-Related Financial Disclosure. So it's just referred to by the acronym. So they kind of laid out, here's the category of risk. And I know we talked about this a little bit last week. So they put them, there are two big buckets: physical risk and transition risk. So physical risk are then, divided between acute risk. So acute risk is like, a huge wildfire, a huge hurricane, just something like boom, like really high impact, big risk. Then there's chronic risk, which are slow, like kind of things happening every day. So sea level rise. We hear about that on the North Carolina coastlines, where it's just getting more and more, and it's destroying properties that are along the coast. It's a huge issue in Miami. In Miami, they have what they call sunny day flooding. It's a perfectly beautiful sunny day and the streets are flooding. That's sea level rise.
Okay.
So if you're in Miami, you're like, okay, what is this going to do to all this, beachfront property or all these huge condo buildings right on the water?
Right.
And also, we spent a lot of time in Miami. In Miami, they have just raised the streets. They literally, in South Beach, just raised the streets about 8 feet
Oh, wow.
because they're like, okay, it's going to flood. The sea's
Yeah.
getting higher, and we can't even get emergency vehicles to South Beach. So it's like this like blunt instrument solution where they just raise the streets, and that
Right.
causes other problems. But I'll try not to get off on a tangent. But
Okay.
okay, but that's chronic. So there's acute physical risk, like huge hurricanes. So there's chronic, like sea level rise, drought, things getting hotter and hotter. It's kind of slow moving. Then there's the transition risk. So that's, legal changes, regulatory changes, product changes, products that were popular before are not as popular, consumer preferences changing, consumers wanting things that are more green, all that's kind of transition risk. A little bit harder to measure. But those are the big buckets. And then they, kind of that's was the outline for companies to start identifying their risk. And so there's been a big push for that. The recommendations came out in 2017. And, so they've been fairly widely embraced on a voluntary basis.
Okay.
No other country that I'm aware of has passed a law like France.
Mm.
But there are, just to give you a couple of statistics, just to get some sense of how is this getting traction. A lot of traction is happening more in Europe than the US.
Okay.
But there is a little bit of movement in the US too. So 340 investors representing 34 trillion in assets have said they're committed to strengthen disclosure. It's still not a law and it's still not mandatory, but they're like putting their name on the line. We're gonna keep pushing our underlying companies that were invested in to disclose. And then in the European Union, they have also come out with a directive, and that all the 28 countries within the European Union are working towards adopting this into law. So there are 6,000 companies in the EU that have been, basically directed to start putting these risks in their annual reports. But, it's tough for the companies because, one, they don't really know how to identify it. They don't have the data.
Right.
They don't know how to do it. And second, they're scared that if they identify all these risks and don't have a game plan to address them, that it's going to make people more wary. So, so it's like a slow push. But, we see traction. And actually, even in the US, even in our current, political climate, in last July, so July of 2019, the Financial Services Committee of the U.S. House. U.S. House is, Democrat, a little bit more liberal. And it wasn't the whole House that passed this, but the Financial Services Committee passed an act, the Climate Risk Disclosure Act, which would require the SEC to develop guidelines. So still, we're a long way from anything that's like required of the companies.
Right.
They just wanted to ask the SEC to develop guidelines, and it passed the committee. It never even passed the full House. But, so a little bit of movement and action. I think people are scared because it just seems like such a huge risk and no one really knows how to address it. So it's like, let's just keep that genie in the bottle.
Right.
Fear is if people start worried about all these risks, there'll be a flight to cash. People won't want to invest in anything if it's too big. And so that's why it's very gingerly, moving along. But, there's definitely sort of a steady drip of pressure to get companies to figure out how to voluntarily deal with this.
Okay.
And, another another movement that, I'm not sure how much traction this has gotten, but Black is the largest investor in the world. They have 6 trillion in assets under
Oh,
management.
what's the name again? It froze right when you said it.
BlackRock.
BlackRock. Okay.
Yeah, BlackRock is the largest investor. They have 6 trillion in asset. Well, they're the largest investor in the U.S. I'm not positive in the world. In the U.S.,
Okay.
6 trillion in assets. And then also Vanguard, which, Vanguard mutual funds,
Mhm.
they have almost 5 trillion in assets.
Oh wow.
And both of them have sent letters to all the companies they're invested in and said, we want you to start addressing this. We want you to
Right.
start formally in your reports and your securities exchange filings. We want you to start identifying your climate risk. We're going to keep the steady pressure on, but at some point, if we don't see any change, we're going to push for new management. If we don't see any change after that, we might eventually start voting out board members. Like, we've got power here. And they really want to work with the companies. They're not trying to ditch their investments, but they look at it as, if everybody will pay this, it protects all of our assets in the long run.
Right.
So, and it also is just leadership to say, we're the biggest investor in the US. We're number one, and we think this is important. So
Yeah.
this is not ideological. This is not just a political issue. These are
Right.
real risks in our assets that we're invested in. And as good investors, we want to manage this like we would manage any risk.
Exactly.
Yeah. So that's kind of what's happening on the governance side. And, another, just a couple, I don't want to throw too many numbers at you, but I
Okay.
want to
That helps.
give some numbers just to kind of put things in perspective. There was a survey of analysts that said, do you think this is important? And, a big percentage said, yes, climate risk
Right.
is important. And then they said, well, this was particularly with municipal bond issuers on
Okay.
this particular survey. And they said, okay, so you think it's important. And of all the municipal issuers, bond issuers, what percent do you think are prepared? 1%.
Wow.
So they're saying this is a big risk. We think it's an important risk to start tracking, and 1% are prepared.
Yeah, it's something so new, right?
Yeah, you know what? It's interesting. In a way, it's new. I guess sometimes I get frustrated with that because I feel like
Okay.
it's not that new. I mean, it's new for people starting to pay attention to it,
Yeah.
but people have been talking about climate for a long time.
Yeah.
But
Yeah, you're right.
I guess what is new, and we were talking about sometimes how change takes a long time,
Mm-hmm.
and you don't see it day to day, and it
Right.
feels like nothing's happening. I mean,
Right.
I feel
Right.
that way with climate change sometimes. It's like, is anything happening?
What's really happening? I agree. I agree.
Is there anything happening that's gonna like bend this in a different direction?
Mhm.
But 2015 was only 5 years ago.
Mhm.
And so if you think that's a tiny amount of time, and in that amount of time, a task force, a global task force has been identified. They've come out with very specific recommendations. They've gotten 340 investors representing trillions of dollars
Wow.
to embrace these very specific recommendations and start pushing for it. So, in actually less than 5 years, because we're only halfway through 2020, and this thing started at the end of 2015. So it's barely been 5 years. And so, to get, trillions of dollars worth of assets to change the way they're managing money, that doesn't happen overnight. So
No.
I think that, we're focusing on governance, this issue of creating a framework, telling them what you want them to look at, creating that framework, building momentum, getting more and more companies to adopt it and kind of show the way. Like Bank of America, I know, they're one of the companies that disclose their risk. So the more companies that kind of lead the way and show how they're doing it, that helps. And then you've got more of these climate data companies popping up. 427 is one. The Climate Service, it's based in Asheville, is one.
Right.
I mean, we talked about it before in terms of
Yes.
innovation, but now I'm talking about these companies in terms of governance
Hmm.
because those companies are getting traction. They're getting backed by companies like Moody's that are embracing them and giving them credibility. And that is helping enable all this climate disclosure because, even like 3 or 4 years ago, companies are like, climate disclosure? I don't even know what that is. I
Yeah.
would have no idea where to start. And these climate analytic companies that are popping up and getting funded and getting traction, they're saying, hey, we can help. These are the big climate risks. We have data on where these climate risks are happening. We have data on where there's big flooding, where there's sea level rise, where there's the biggest risk of hurricanes. We've got data, and we can overlay that data with where you have operations or where you have employees or where you have customers. And this whole industry of climate consulting is getting propped up and getting traction.
Right.
And for people like me who focus on this every day, it seems so slow, but a lot has happened in just a few
Yes.
years. So it's room for optimism. I think, like what we were talking about at the beginning of the conversation, you have to celebrate progress, you have to celebrate your wins. And also I think you have to look at things at like 6 months at a time. If you look at it every day or every week, it's like nothing's changing. And you have to sort of celebrate progress. So I'm going to give you one more fact.
Okay, perfect.
This is kind of more of a fun fact, but
Nice.
it's another reason we talk about a lot of this governance in terms of risk management. You don't want your company's revenue wiped out or their customer base or their huge manufacturing plant wiped out. That's the risk. But another thing that I think is relevant to this is looking at who the investors are coming in. So with millennials, 30% of millennials believe that the number one priority of business is to improve society.
I like that.
That's great. And they financial advisors expect about 30 trillion in assets to be transferred to millennials over the next few decades, as the
Yeah.
generation. So a lot of wealth that is with people, people who just may have a different mindset because the world
Yes.
has evolved. 30 trillion transferring to these millennials who believe the number one purpose of business is to improve society.
I love that.
So that's a huge opportunity. It's an opportunity, but it's also a wake up call to businesses
Yes.
to say, if you want to keep getting
Yikes.
capital, you want people to keep investing and buying your stock,
Yes.
you better tune in to what investors care about because everybody needs capital. Everybody needs capital to run their business and to keep their stock price up, So I think that's very encouraging on all levels. That's not just
Yes.
about climate change. That's all levels that if millennials will stick with that and not change their outlook as they get older, if they can hang on to that belief that the number one purpose of business is to improve society and hang on to that. And maybe instead of it being 30% of millennials, maybe it gets to 50 or 60%.
Let's go. Let's get 60 and 70.
Right. And so think about the power of that,
Yeah.
that
Wow.
over time, the millennials have the purse strings to say, we're going to do things our way. If you
Right.
want our capital, if you want us to invest in your stock, whether it's Apple or Google or Facebook or whomever, if you want our capital, this is what we believe in.
I love that too, because what you're saying is it affects so many areas of business. besides climate, because now you have
Sure.
to pay
Yeah.
attention. I think one of the things that are going to be is going to be important, like this show right here, is just the education being handed down to my
Yes.
peers.
Right.
Because these numbers, I'm glad that I'm writing these notes down, because these numbers that you're giving, this information about these companies and data companies, if they're not here, then we don't know. You know, the data
Right.
companies
Right.
aren't here, so we still need more data companies. We still need more consulting agencies,
Mhm.
even on the lower scales too. For, just on a minor scale for smaller companies too, to
Right. Or
certain on certain
cities
things.
and to
Yes,
help the city.
cities. Yes,
Yeah. Um,
yes,
yeah, because the cities are also very powerful. I was in
yes.
a meeting one time with Braxton Winston, and
Okay.
I loved this. And
Yes.
we were talking about setting, setting some sustainability goals for Charlotte and setting some really ambitious goals. And somebody in the room said, "Well, I just, I don't think we have the technology to do that." And
Hmm.
Braxton said, "This is our house. We set the rules in our house, and
Right.
they will have to build the technology
Yes.
to, to meet our needs." And it
Yes.
was like, yes,
Yes.
yes. It was like, where did that mindset come from? I was so
Right.
proud of him. Like, and we're not talking something that we want to happen tomorrow. If you're talking about a goal that you're setting for 10, 20, 30 years out to 2050, yes, you have to believe that you're going to drive innovation. The goal and having that goal and saying, this is the way we're going to do business, that drives the innovation. If you're just going to say, we're going to just set our goals around what currently exists, I mean, that's not really a goal. That's a
Mm.
plan, maybe.
Hmm.
But anyway, I loved that attitude. And I think that that's the way we've got to think.
Yeah.
You can't just base your aspirations on what's right in front of your nose. Your
Right.
aspirations are what drive creativity.
And with that, I think the best long-term goals, like when you made that example about 2050, which honestly isn't that far. It sounds
Well,
like, but it's
when you think about 2050, it sounds a long way out, but of course, if you're going to set a goal to be, carbon neutral, for example, there are a lot of milestones along
yes,
the way. So then when you start breaking it down to all the milestones to get there, and some are in 2030, which is only 10 years from now, and even to get to a 2030 goal, what are the milestones that have to happen? I mean, it brings it into present day pretty quickly.
right.
And then it's like, okay, not only can we do this, we got to get started. We can
Yes.
at least get started, and then things open up. You get more creative, you get more innovative, you get some breakthroughs, uh, and yeah, but it galvanizes you to get started.
Yes. And I love what you just said about the milestones, because there are so many great short-term goals that we can be looking forward to say, hey, this is what we accomplished in this 6-month run, this is what we accomplished this year, this is what we're working on now, and to show that chart, and to show that, and let community see, to show and let investors see, board of directors see. It's about that education, and I love the fact you have numbers, because we have to see the numbers.
Right,
That's
right.
the estimates.
Yeah, it galvanizes you to keep going, and of course, it's not easy. I mean, nothing like really big and breakthrough is going to be easy.
Right.
But having that goal also, I think when you have a big ambitious goal, maybe it's to get all these companies to minimize their climate risk so that we all have a stronger country, stronger businesses. I mean, that builds wealth for everybody if the businesses are strong. And when you have kind of an inspiring goal, it helps get everybody on board to work together.
Mm.
You see that big thing you're all aiming for together. So
Yes.
yeah, so I guess it starts with this idea of governance, setting the framework and setting those parameters, and then holding people accountable that
Hmm.
this is the direction we're going to go. I mean, that's what the investors are doing. That's what a board of directors would do. Says, okay, you figure out exactly how to get there. We're setting the framework so
Hmm.
that governance, really plays an important piece to say this is, and you can take it to all different areas. It brings it back to the voting booth. If you say, okay, we want governance in our city and our
Yes.
state and our country, I'm just a voter. I'm not going to tell you exactly how to do it, but this is the direction I want to go.
Right.
I, you know, I want less carbon in the atmosphere. I want more justice. I want things to be more fair. I'm going to set the framework and hold you accountable at the voting booth. And
Yes.
that's where we really all have a role to play. And in whatever it is that's most important, to each individual.
Yes, that is, it's a whole circle of actions that have to happen here, portions
Mhm.
have to happen here. And that is the foundation right there. Then comes what we'll talk about next time is the strategy.
Mhm.
So I'm excited to hear what kind of information you put together for that.
All right. Well,
Okay.
till next time.